The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 19th day of September. My pleasure to be here Monday through Friday at this time, Eastern Time, 11 o'clock. And that's on market days. Don't forget to go to that front page of TFNN because you do want to see what's being offered to you. A fantastic opportunity in the Nadex platform. TFNN sponsoring $10,000, just oodles and oodles of prizes given away. I can't believe you're being paid to experiment, to understand, to learn a new way of looking at charts. Although you could use any old way. Look, I've got here, I'm going to grab this. I wasn't going to do that. I just decided to do it right on the spur of the moment. Using the Chapman Wave methodology of identifying the lowest low bar, you can merely count each successively higher peaks, waiting for a peak D, which is really the objective. Certainly it can go higher, but D is what you want. And look what happened. The 2-minute ES December S&P E-mini went from the lows, the double bottom low of 1997.25 back at 9:36 this morning. It goes peak A, peak B, peak C, pulls back, hits that 200-period exponential moving average, and whoops, goes up in a single leg right to a D, and now it's pulling back. And there is a chance, there's just a chance that we might have seen the high for the day. We will see. I mean, this is speculation on a 2-minute chart. But anyway, that's how it is. Oh, but wait a minute. See the 10-minute. Did I finish that? 10-minute. I don't think I actually finished the 10-minute chart. Yeah, that was there an E, and then you get a right arm extension going to an F/B in the two. But certainly that E, the D took you to the top because the E was just fractionally higher. So the same technique. So check out that Nadex platform. See what you can use with your own technique to garner tremendous profit potential and to know exactly what your stop is. That's the beauty of the Nadex platform. Thank you for John Logan and for Steve Rhodes for the actually 3 great hours of education right here at TFNN, starting early in the morning, 8 o'clock Eastern Time. Straight after me Thursday today, Larry Perseverant. What a perfect time for Larry to come on with gold turning around like this. I'm going to show these charts. Let me just get to this right away. What happened to the charts? Okay, you've got the Dow up 84 at 17,241, making an all-time high. The S&P just squeaked to an all-time high today. It's at 2010.10. Let me just get the chart ready. I'll do this together. Let me just do this with INDU, with the daily and the 120-minute chart. This is an A, let me double check, 1204. Yep. This is A, B, C, D, E. This is leg E in the 120-minute chart. Stochastics at 85%, MACD still good. And it's a very strong leg from the low of 69.37 on the 12th of September. Single leg up so far. And it's E/A in the Chapman Wave. My bias is to call it an E right now because the MACD and stochastic are not confirming the rally thus far. And this is going to be very interesting because the weekly chart is in I have to call it a B for now, but I'm going to show something a little later on that's going to be really interesting because even if this is a B, you could still get a pullback, and it could be a pretty darn sharp pullback, not a major setback, but pull back enough to go to the 16,800, 16,600s if there's really a series of bad news events next week. Now, I wanted to show the S&P, give you the parameters there. S&P all-time high, but now it gets an instant restart weekly. So now we've got a D in the weekly /B. All right, so that clears up. That would be together with the Dow. Look, the MACD has not yet confirmed the upside. Stochastic is very good at 92% in the weekly, but the daily has an E/A to the upside with that that Chapman Wave falling axe formation breakout to the upside, 1-to-1. We're almost at the end of that right now, especially if you're looking at the, let me grab this, the 120-minute chart is in leg E, just above in a V-shaped pattern, above the previous high of 2011.17. Support will be 1998 on a worst-case basis over the next 3 days. And then if it breaks under that, then we're really looking at a pullback of time and price. But if, in fact, we go to the 2018 to 2022 level, that is just another thing altogether. And we could, if that happens, you will get an acceleration to the upside because the money managers will be forced to be putting their money to work. They just have no choice. Okay, let's go to the QQQ series. 1, 2, 3. QQQ. Also, leg D in the 120-minute chart. Let me just open this so that you can see it. There it is. Hasn't made a new recovery high. So this is going to be very interesting because 100.46 is the level to break. And at this particular point, you've got an F/C in the weekly chart. So it could go to a D. Oh, man, I tell you, this is such an interesting period. And what I said to my subscribers this morning is that based on what we're looking at right now, the coming couple of days could really tell us a lot about what happens in September. Now, if you want to be a fuss budget, and I am a fuss budget, you want to look at the Comp X. This is a very broad NASDAQ. Here it is, Comp X. This is the composite index, whereas the NDX 100 that goes together with the QQQ series is the top 100. These are the, this is much broader. And it's gone to a leg D in the 120-minute chart, leg C/D in the weekly chart, leg E in the monthly chart. Oh, man. And the falling axe formation just broke out. It's a remarkable thing, as someone in the den mentioned to me. It is remarkable how many times peak C1, peak C2, fractional failure, still ends up getting a leg D. And we'll see if the comp index is able to go above 46, 10, 14. It might have a little difficulty. Yeah, we'll see. So that's that. Now I wanted to go straight to the gold. GCZ. Let me show you something. I did this the other day, and I'm really sure that I showed it live as I was doing it. I did during the break, because I think I did it during one of the breaks and the Tiger Technicians Hour, so the folks in the den could see it. Hey, the den. Not only if you sign up for the Nadex platform experiment, or not an experiment, for many people it'll be an experiment, for many of you it'll be the competition, with free $25,000 in funny money, we call it, but you will get access to the den. That's this medium that shows the charts all the time as we're looking, as we're producing them, as they show up on TFNN. You will see them. Now look at this. I drew this the other day because I was very interested. I love to do channels. I've done workshops and a lot of things just on 2 lines. I happen to add 4 lines, but you only need 2. And I'll explain what I mean. If you can identify the correct lows and the correct highs for a single trend line, you can produce a trend line that can go from 2 lower lows, or 3, or 4, 5, and the upper one should be a parallel move that has almost the exact, when I say almost, I mean it must be so close it's within fractions of the high, a parallel series of lower highs that match exactly your trend line. And look at this. That trend line started with the low back at 5:15 on the 26th of August. This is a 120-minute chart. I call it the intermediate term. Intermediate term being a 120-minute chart. That certainly is actually more like a long term. And the high was the high of the of gold, the contract at 1297.60 at 10 o'clock in the morning of the 28th of August. And from that moment, you got down channels, lower lows, lower highs. And what I'd shown subscribers this morning is that there was a chance that there was a double bottom here, and that the dollar was real close to some kind of a reversal, and that the gold could be making that that goes to the double bottom, successful double bottom. And if it closes decisively above, I didn't mention this, I didn't have time, but if it does close above 1226.20, that's the arch formation, lowercase h formation, in the 120-minute chart. If it does do that, and so far it looks like it's trying to do that, very nice move up from 12.1630 to the high today of 28.70, and right now it's at 12.2680. So this is going to be very important for gold. Gold has had a massive move to the downside, and to complement that, look at the dollar. The dollar has gone DXY. Look, this is the dollar index that's gone to a leg F/B. Everything about this says that it should be an F, but I've got to be careful because it was a strong move. There was a higher high today, and until the evidence is there, not only that you had a leg B and then it became a peak B in the 120-minute chart, but this kind of formation makes a cup or a bowl formation, spikes to the upside, and how it holds the left side lip. In this case, this is the dollar index, the 84.52 high at 5:15 on the afternoon of the 9th of September is going to be very important, because this pattern says if you close decisively below, you have made a single leg up to the upside, and that is vulnerable to a strong dip. Let's go to Shiv in Boston. Hi, I don't think my engineer wrote correctly. It's Shiv. Hey, tell me, how do you say your name again?
Hi, Basil. How are you?
I'm well. How are you?
Very well, thank you. A nice sunny day in Boston, I guess.
Beautiful, beautiful day. Yesterday, playing tennis was just exquisite. So Shiva, there's a vowel missing at the end, right?
Yeah, I was looking for the opinion on the Morgan Stanley MS.
Okay, let's go to MS. Morgan Stanley at all-time, is this all-time highs? I don't know if it's all-time highs. I think it's recovery highs. Yeah. Whoa. Morgan Stanley once hit 75.50 back in June of 2007. Had a little bit of a decline down to $6.71. Oh, my goodness, in October of 2008. Brand new buy mode. This is leg D. There's an exact example. This is the monthly chart. What a beautiful example of a Chapman Wave peak C1, peak C2, and then it starts the move up, holding the 9-period moving average to leg D, and the MACD is very strong, stochastics very strong. So the monthly has no signals whatsoever. The weekly, wow, is in a brand new leg E or A, and that's, once again, right here. Ooh, beautiful breakout. Oh, look at that. Do you own this? Do you have it in your portfolio?
Yes, I do own a significant amount of shares, and bought it around 29, and I think my prediction is it could go to almost close to 38.
Well, this is a D, that's an E, that's an F. Wow. Is this 23? Oh my goodness. The MACD is expanding in the daily. The stochastics at 93%. And I'm looking at this, and I think we've got a break coming up in another couple of seconds. I'd like to do, you're in the position, so we don't have to hurry. It's not like you've got options or anything on this thing that's going to close in an hour. So give me a moment. The break's coming up. I'm going to do a little work on this, and I'll come back because you've got a beautiful chart here. This is beautiful looking. I'll be back with Shiva Ann from Boston, and we'll be right back looking at Morgan Stanley. Dow's up 82, S&P's up 8. Be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Basil Chapman, Tiger Technicians Hour. We're up 86 in the Dow, up 8.5 in the S&P. The comp index is up 23 at 4,585. And what's really interesting is that bonds right now, the TLT is up 37 at 113.17. I'm suspecting a bunch of things which we'll talk about in a moment. We're looking at the most fantastic chart right now. This is the Morgan Stanley trading at 36.13, up 57 cents. The 120-minute chart is in leg D. I managed to do this. I don't know if I'm going to have too much time to talk about it because I know that, Shiva, you're looking at this and you're talking on a cell phone that's kind of not that clear for you, but let's do this. So what I'm going to suggest, you're in the 29, you're up 6 points, 6.7, almost 7 points. I think that this is a tremendous looking stock. On the shorter term, everything about the chart right now says it's becoming a little extended by about 2.5 to 3 points. That doesn't mean to say it has to come back down. I'm just saying from visually, the extension that it's had and the straight up move that it's ever since the 9th, was it? Yeah, ever since the 9th of September, at 33.82, the 3 points, 2 3/4 points that it's got right now have been virtually straight up. And I've got an F/A in the daily. But what's really important about this is that The technicals are very, very strong, and they don't usually give it up in one immediate swoop over 2-3 days unless the stock market itself pulls back. So let me just ask you the question. This is more an intermediate term position that you've got. You would like to hold on, right?
That's correct.
Yeah, this is not a tradable position. You'd like, in fact, to be holding it, hopefully even kind of forgetting about it, looking at it in 2 months' time, 3 months' time, saying, oh, it's held very well. In fact, it's even up higher than it was a couple of months ago. That's kind of the way I would like to treat it, but I'm just going to make one suggestion. Because there are some signs within the market that say, unless there's a rotational correction, that's already actually kind of begun, because there are some stocks that have already stalled, and there are other stocks that are just picking up steam right now. And certainly the financials, Morgan Stanley probably being in the XLF, and Goldman Sachs. Let me just do this for a second. Goldman Sachs also looking very, very strong here. It's almost like this is breaking out in the XLF to the point where if there is a pullback, the pullback should just give back the most recent gains rather than big gains made on the weekly chart. So yeah, this is what I'm going to suggest. I'm going to suggest that Morgan Stanley at this particular level, there are two ways to think about it. Either you're in at 29 something and you want to make 31 your stop on a core position, because if it comes back and it breaks under 31, it certainly could come back into the 29s again. So to me, that would be the way to think about it. But most importantly, if you are looking at a stock that is extended and that you would prefer to keep your gains and maximize your gains, the only thing that I would say to you is you might take not even a third, you might take something off here, right here in the 3611 area with the specific intention of putting it back in between 34, somewhere between 34.80 and 33.50. That way, you're putting it back in 2-3 points lower, and the other way is that your core position at this particular point, any pullback will have to do with a market pullback, because that's the only thing that I can see right now that it will drag they'll drag the financials down because they're acting very strong. So I don't want to touch your position because you got in correctly, you're in it correctly. I don't want to make your thinking all topsy-turvy. All I'm going to say is that based on my shorter-term work, if you wanted to take a little bit off, knowing that it could still go higher without that little bit on, then I would do it just about now. And I would actually dedicate that money back to Morgan Stanley or Goldman Sachs, these two real leaders in the XLF, to put back. So I hope that helps you.
Okay. What do you see near-term target?
The near-term target, for me, the near-term target based on the monthly chart, I'm basing it, the short term I'm basing on the longer terms, because that's the only way I can get it. The near term's broken out. So the only thing I can say is 36.70 to 37.30 I think will be very strong resistance. But the MACD and stochastic are still very good. I would only take some off as a money management thing, saying it's prudent to take some profit off, but that money must be dedicated back again. Otherwise, just stay in, let it tell you. But so far, it's acting very well. But it is close to some kind of a pullback towards 35.14, 34.83. Hope that helps you, and congratulations. That was a tremendous trade. Thank you. A tremendous position, not a trade. Thank you for calling, Shiva. I appreciate it.
Bye, Basil.
We'll go to Scott and Safety Harbor straight after this break. Folks, I'll be back straight after.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. Basil Chapman, Dow's up 92. S&P is up 8.97. Interesting, the Dow's slightly stronger. I think that's DuPont, maybe. Slightly stronger than the S&P. We're going to go straight to Scott in Safety Harbor, Florida. Scott, how are you?
Couldn't be better, Basil. You know, I'm always into the Apple scene, but also Gilead. When Gilead dropped back because of some news 4 days ago to the 98 range, you know, this has happened so many times with these premium stocks, and I really think these analysts purposely put out bad news, or, you know, what some would term bad or whatever, to bring the stock price back so they can buy it. But I decided not to take their advice and buy Gilead, and I'll be darned if it didn't jump up to 106 today. I mean, absolutely unbelievable. I mean, I looked at the screen. I thought it was something wrong with the computer.
Oh, no, this is a great move. And what's interesting is that if you use a technique that I often talk about, the 200-period exponential moving average, I'm highlighting it here on Tiger TV in the 120-minute chart, it hit that exactly at 11:30 on the 5th of September, went to 97.55, and then it bounced huge. It went peak A, B, C, D in the 120-minute chart, went all the way to 108.49, and then plop, it came right down, and twice it's got the same kind of chart that gold is making right now with that double bottom. And what it did is it went to 99.33 at 11:30 on the 15th, tried to rally, couldn't make it, it wasn't quite ready yet as the stochastic and the MACD started rallying, and plop, it went right back to the 200-period moving average again at 11:30 on the 16th, and at 99.23 took off, and now it's in leg B. It's actually making a potential peak B. But one thing that I'd be a little, I'd just warn a little, just to kind of be careful of, and that is, let me do this right now. There's a trend line. Remember, I like to talk about how one single line, trend line,
because when it gets, I mean, I'm out. I mean,
oh, you're done. Wow.
At a $4 gain I made, I mean, I snapped out of it. You know, I mean, I'm not, you know, I get my 500 shares and I was gone. What I really want to spend time on is the Yahoo. I don't have any, and I'm not any positions at the moment, but it's very, just doesn't make sense that Yahoo's not getting more activity today. They're going to have billions of dollars dumped in their lap, and no matter what they do with it, it's going to bring money to that company. And it's just, I mean, it's dropping today.
So let me show you something really interesting, because I got a feeling, it's just a feeling, and we have absolutely no way of knowing, that tomorrow the market might sell the news. We won't know until tomorrow, but that's what I'm looking at. Look at, in my charts here that I showed, this is the 120-minute chart of Yahoo Inc., YHOO, trading at 41.86, down 73 cents, as you say. But in my technique, in the Chapman Wave methodology, the idea is to identify the most obvious lowest low bar and then merely count each successively higher peak to at least the peak D. At D, you've got to be a little bit careful. Things can happen there. Well, look at this. It goes from a low, I love this chart. It goes from a low of 35.15 at 3:30 in the afternoon of the 12th of August. And what does it do? It goes A, B, C, D. And it pulls back from 37.94. It holds the 9-period moving average, starts a brand new move, and it goes A, B, C, D again. And at 11:30 on the 27th of August, it makes a D, pulls back, holds the 9-period moving average, starts another A, B, C, D. At 11:30 again on the 1st of September, pulls back from D, starts a brand new A. I've used a phantom peak for the B, goes B, C, D. And lo and behold, at 11:30 on the 9th of September, every time in the morning, it pulls back, makes the peak D, and then what does it do? It goes A, B, C, and it makes its final D right there at 11:30 on the 15th. That was yesterday at 44.02. Let me type that in. And what's happening now is pulling back. Why? Because just as you stated, everybody now knows that they're going to have cash, and now you have to wait for some kind of a pullback because you want to know what's going to happen to the stock that's coming up. Let me squash this a little bit to show you something even more interesting. Look at this trend line. One single line. Look at this. Goes all the way up. And look at that line. I'm going to make it a red line. No, I'm going to make it a green line. The green line says that if it holds above that line, now I'm going to make another line right here, and this is a red line. And the green line says if it can hold above that line, it'll be the first time since it's become resistance, a repellent zone, I call it, the inside track repellent zone, and it'll be very positive. Well, it couldn't. It went above it, couldn't hold at the bar, then went above, went below, and then it kept coming back, and now it's testing the lows, most recent lows. Today's low of 41.62. It's just 20 cents higher. Now, what's interesting is the MACD and stochastic have pulled back, and that particular trend line is saying, that's the resistance. If there is going to be a rally at any point, 43.89 to 44.02 is going to be the big resistance to count on. Now, it just so happens, remember I was talking about those Ds in the Chapman Wave? Well, there was a peak D. It was an instant restart back at 38.22 on the 25th of August. And then what does it do? 3 days ago, on the 15th, no. What's today? The 18th, 19th. Oh, 3 days ago, 4 days ago. It goes to 44.01, and that was a peak D, and now it's pulling back. I suspect that the real test for Yahoo, there's a gap between 40.26 and 39.80. It's either that gap or the gap with a high of 38.20. So every way I look at it, it says be a little bit careful here, because Yahoo could, in fact, you're right. I think you've got to consider that the news will come out, and it might turn out to be a sell the news. And if that's the case, I'd have patience, because in my weekly chart, although the monthly is in leg F, my weekly is still only in leg C, even if I count it in an alternate count. And that says Yahoo should make a higher high at some point, but there needs to be a little digestive phase.
I'll tell you, that'll be one of the most bizarre things that I've seen in my 7 or 8 years of trading. If Yahoo does not go up tomorrow, it will make absolutely no sense, but this market doesn't make sense. So.
Well, yeah, the only thing I can say to you is we don't know. But from the chart pattern itself, the MACD is still good. Stochastic on the daily is only at 77%. That MACD says there is still some internal strength. There should be a rally. I'm not sure the rally is going to take it to 44.02 to make another leg up, but it could bounce to the high of the day of today, 43.32.
I'd like to say that anybody who's trying to get in on this Alibaba thing, just remember there's hundreds of other stocks. I mean, there's at least 20 of them that have very good patterns, established patterns. So why put yourself out on the ledge when you don't have to? You can jump into Apple, you can jump into Gilead, BAC, so many things that have established patterns. There's no reason to take a risk like that. I just don't understand why people are so excited.
Very good point. And, people get carried away. They get caught up in the tide, and there's very little you can do. It's just an emotional thing. I just wanted to mention also that in the 120-minute chart, I haven't yet got any stabilization in the technicals. So I suspect that even if Yahoo bounces, it might take a little bit before it can actually reestablish an uptrend. But for now, I think the bulk of the move in Yahoo's been made. Now needs to digest these gains.
But the only thing that I can compare it to, if you remember last week when I was into Apple in a big way, it was 98.60 the day before the opening. The day before, nobody was interested in Apple. The next day, it jumped up $3, and it was. I mean, it's just. I would have thought everybody would have been buying.
You know what? That gives me an opportunity to talk. You remember when we were looking at Apple? I said to you the very wide trading range between 103.08 and 96.13 sets a rectangle formation, and that there's a good chance it's
perfectly.
Right.
Put money in my pocket.
So those patterns repeat, and hey, congratulations on some real nice trading. Thanks for calling, Scott. Hope to hear from you with another great trade very soon.
Yes. Bye-bye.
Thank you. Bye-bye. Let's go to Mark in Denver. Mark, how are you?
Good, Basil. How are you?
I'm well, thank you.
Good. So I don't know if you ever do this. Do you ever do a 30-minute?
Oh, yeah. I do everything from a 1-minute to monthly charts.
Okay,
Anything that moves.
I'm looking at a 5-day 30-minute of the Qs.
Okay. Oh, have I notated it? You know what? I haven't got the notation, but it won't take more than a second. Give me a moment.
Okay.
I just want to find my 30-minute chart. There it is. I'll put it up right here. And let's go to the QQQQ series. And I've gone A, B, C, D. This is leg E, peak E already in the 30 minutes. Is that what you get?
Well, I was looking from the 16th, the first bar on the 16th is starting the pattern, going up to an A.
An A at 98.78 at 10:30 in the morning of the 16th. Pulls back, goes to leg B, and then peak B at 15:30 on the 16th, and the price is 99.57. Pulls back for a 1 bar and makes another high of 99.60.
I think you missed one. I think 99.44 was the B.
So wait a minute. You might have something different because you've. Oh, wait a minute. 96.44. Yes, it was covered. Thank you for telling me. Whoa, that's just as well. I always double check because if something's covering it, it's very easy to miss it. I should have automated it by now.
99.44 was the B.
Right.
99.57 was the C.
And then 99.60 is the D.
And then it pulls all the way back down to yesterday's low at 98.93. And
it makes the pattern that I love to see. It's that either the channel or the falling axe formation, and then it spirals higher from the low of the 17th. That's this morning at 2:30 in the morning. Is that? No, it can't be. Whatever that is. 14:30. Yep. Oh, on the 17th. It goes to 98, 99, 93. Now, the big question is this E/A, F/B.
Right.
And that's the question. In my work, this particular pattern that I call the double camel hump. This is what there are some camels that have one hump. There's some that have two humps.
Right.
Well, this is a pattern. It's the M formation in the stochastic. And I don't know if anybody remembers, back in 2008, we had those highs in August, I think it was, and everybody thought that was it. The stock market's finished, etc. And then what happened is, no. We had the September-October rally in the weekly charts, and that fulfilled the E to the F. And that was that extra, what I call the double camel hump. That was that extra arch formation in the stochastic. In this case, it's happening right now in the 30-minute chart. It's the same pattern. But I don't have any evidence here because it's 88% in the stochastic. MACD is good, and I don't have any evidence to say that it is definitely an F or definitely a B. It's holding very well. I have no choice at this point to put in an F/B. I probably should put a B/F, but I want to be very conservative, call it an F/B. You were going to say what?
Well, I was wondering, the other way I was looking at this was there's kind of a, it's almost like a lightning bolt type pattern from that low on the 16th to the high.
Well, I'm going to have to interrupt you. Thank you, Steve Rhodes. Steve said the F should be another one. I've been talking instead of this should be a G/C. Sorry, the last one is a G/C. Absolutely, I saw that, but I forgot to put it in. Thank you. Yes. Now, fire away. You were saying?
I was wondering, do you see any type of a lightning bolt pattern, meaning that it's got one kind of, if you just look at the leg up, a bigger leg up, a bigger leg down, and then another leg up.
A lightning bolt pattern to the upside. I just want to clarify. Yes. So A to B pulls back. Now we could have the C to D. That's really what you're saying, right?
It would take it right to the highs, almost exactly.
So now let me do this. In the Chapman Wave methodology, there's a particular technique that I developed. I really refined it last year. It is a time lightning bolt. When everyone at TFNN talks about an A to B equals C to D, it's that classic formation. The difference is I have a time aspect to it. And that time aspect to it says that there could be an A to B equals, we've made the C at the 98, 93 level, and it could take you all the way to 100.47. Well, 100.47 turns out to be
the high. 1 penny above the high.
1 penny above the high of 100 and, whoops, let me just get it over here, of 146. Right. So yes, that is absolutely a possibility, and we're going to know a lot more. I have to tell you something, that if the stock market at this time tomorrow, if the stock market is not down 40 points or more, the Dow's down 40 points or more, S&P's down 5, but instead the NASDAQ is up 12 or more, the Dow is up, say, 8 or more, and the S&P is up about 8, I have to consider that the possibility of an intense buying phase, I cannot rule it out. So many charts say it shouldn't happen, but there are enough charts. We're looking at Morgan Stanley a little while ago. We're looking at a number of charts that say there's enough energy left in the den. Yah says coda. Yeah, this would be a different kind of a coda. My coda is a much bigger coda that we're talking about when I showed the chart yesterday of the Dow, the very long-term chart that I have with the 7-year cycles. And I did get a couple of requests for the chart, and I've had to say no. I don't usually say no. You can take it off if I show it here on the web, that's fine. But I really don't send out charts that for me are experimental charts. That's a work in progress. So I just wanted to mention I don't like to send out that particular chart. That's my private chart. I will show it, but I like to do my work on it, my homework on it. Hey, can you hold on a second? I just wanted to look look at something else in the Qs. I want you to look at the VIX index of the Qs to show you something. Okay, we'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direxion Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direxion Shares gives you the tools for both sides of the trade. Discover how we can help at DirexionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion Shares. To obtain a prospectus or summary prospectus, please contact Direxion Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. The Futures Hour, next on TFNN.
Hey, listen to the Futures Hour. Just a great show coming up with Larry Pesavento. Just wonderful shows all the way through the afternoon. And go to the front page of TFNN. Just check out. It's really important that you don't miss out on an opportunity like this to use the Nadex platform. Wonderful, wonderful gifts, and you can get the Den free. So we're on with Mark and Dan. We're looking at the QQQ, but I've just grabbed the VXN. The VXN is the volatility index on the NASDAQ 100. So this is very interesting because based on the Chapman Wave methodology, from the low bar of at 11 0.35 on the 3rd of July, starting a gap up high the next day. It goes peak A, B, C, D, pulls back. And then the pattern I was just talking about in the Qs on the 30-minute, look at this. It's really interesting. The stochastic makes an arch formation and pulls back. The MACD pulls back, but it holds the it holds the red line, the slow moving average, 12.26.99 is the differential that's made up. It's an exponential moving average that's made up of the 12 and the 26. Now look what happens. It deflects back up and it goes higher, and that allows it to go to the E and the F. So now what I'm looking at is in the daily, we've just gone ABC, and 3 days ago we went to 1705 in the VIXN, VXN. .x, that's how I get it. And what happens is it pulls back really sharply to this uptrend line. And even though the S&P have made all-time highs, look what's happened. The same thing's happened in the VIX index. It hasn't yet broken to the lows, the most recent lows. So to me, that says just keep an eye on this, because there is some internal strength in the VIX index in relationship to the price of the NDX 100 or the QQQ series. So I thought I'd just bring that up, and just to show you that there is a relationship that's going on here, and it can be seen by some of the stocks. We don't have to get that one-to-one. That was really my point, that in this area right now, we're going to get a real test tomorrow. But I'm just going to let the prices. We already got one position. So far, it's holding quite nicely. I'm surprised it's actually holding as well as I shouldn't say what I can do. The next hour, it's gone. Anyway, we have a couple of short positions, and I'm going to hold those short positions and see what happens. But in the meantime, the QQQ series, if it goes above, distinctly above, if it goes to the 101 to 102 level, 101.50 to the 102.20 level, I have to consider that there's going to be just an intense buying spree coming up. If it starts to fail, it's going to take a lot of people by surprise. Hope that helps you.
Yeah, I was just curious because I was talking about the Qs based on the fact that the comp index, the bigger index, still hasn't got to that D yet, and I was wondering if they might coincide with that getting to a D.
You're absolutely right, and we see, I mean, it's just people just email me all the time saying, I don't believe it. I don't even, how did Yahoo make those 5, or was it maybe 6 peak Ds and turn down? I don't know what that means, but it's really important in my work. Yeah, it could, but it has got the C1, C2, which is preparing us, and in a traditional sense, the comp index, if it goes above 4610.14 by 1 penny, that'll start an official leg D rather than the alternate count D. We're going to be watching it real closely. Thanks so much, and good observation, good eye. Thank you, Mark. So, folks, we're about to hand over to Larry. Before we do that, let me give you my numbers, because the news will be out early tomorrow morning. You might not even have a chance to do anything, because it'll be overnight, and by the time we start tomorrow at 9:30, the Dow could be up 150. It could be down 150. Who the heck knows? But in the meantime, we're getting a little bit overbought, but the Dow is acting, I can't say it's acting badly, it's acting really well, but it doesn't have the veracity of the stochastic at 68%. It's making highs without that. So in the meantime, back at the ranch, I just say, watch these numbers. Dow going below 16,950 in the next 3-4 days, not good. Dow holding up here in the 17,250, 30 area, I'd say that's actually good information. I'll be back tomorrow. Have a great day.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.